Monday, December 25th. On this day, the main world markets will be closed due to Christmas celebrations. Only Japan will reveal its statistics. Thus, at 7 a.m., this state will present the leading index. It reflects the fluctuations of important economic indicators in various activities, such as production and employment. The growth of index values is considered favorable for the economy and the national currency. Tuesday, December 26th, already at 1:30 a.m., Japan will report on its unemployment rate. The indicator is calculated as the percentage of unemployed citizens to the total labor force. The unemployment rate has tended to improve in recent years, but it is suspected that the government is fudging the data. A rise in the index could have a negative impact on the yen. By 4 p.m., financial players will receive statistics on the S&P Case-Shiller U.S. Home Price Index Composite 20. It reflects the change in the cost of residential real estate in the 20 largest U.S. agglomerations in the reporting month compared to the same month of the previous year. Its growth may favorably affect the dollar. Wednesday, December 27th. On the last Wednesday of this year, Japan will again be the first to report its most important data. Thus, at 7 a.m., this country will reveal the volume of housing starts. This indicator shows the percentage change in the number of new housing construction projects started in the reporting month compared to the same month last year. An increase in the indicator may have a positive impact on the Japanese yen. A little later, at 5 p.m., the Federal Reserve Bank of Richmond will report the manufacturing index, reflecting the level of business conditions in the 5th electoral district of the United States. A value of the indicator above the expected value should be considered favorable for the dollar, while a lower value should be considered unfavorable. Thursday, December 28th. On Thursday, the Land of the Rising Sun will report retail sales by 1:50 a.m. They reflect the total sales of retail goods and services for the reporting month compared to the previous month, then are an important indicator of inflation in the country. The growth of the indicator can positively affect the Japanese yen. Already at 10:30 a.m., Hong Kong will publish the trade balance, the total difference between the value of goods exported and imported for the reporting month. A positive value of the balance indicates a trade surplus, while a negative value indicates a trade deficit. A higher than expected value of the indicator may have a positive impact on the Hong Kong dollar exchange rate. At 5 p.m., the U.S. will publish pending home sales, an indicator reflecting the change in the number of contracts for the sale of residential houses concluded in the reporting month. It characterizes the strength of the housing market and the aggregate demand for it. The increase in the indicator may have a positive impact on the U.S. dollar. By 6 p.m., the U.S. will report on the U.S. crude oil stock exchange. This is an indicator included in the weekly report of the Energy Information Administration of the U.S. Department of Energy, which reflects the number of barrels of commercial crude oil contained in the storages of U.S. companies. The growth of the indicator indicates either a decrease in demand for raw materials or a jump in production. This negatively affects global oil quotations, but the price change is short-lived. Friday, December 29th. By the last trading session of 2023, South Korea will publish its statistics. Thus, at 1 a.m., it will report the Consumer Price Index, which is the change in prices for a fixed basket of goods and services and includes spending on all major segments of private consumption: food, clothing, payments, housing maintenance, healthcare costs, communications, etc. An increase in the Consumer Price Index may have a positive impact on the South Korean won. At 8 p.m., the Baker Hughes U.S. oil rig count will be released. It is considered an important indicator of activity in the oil and gas industry. In general, an increase in the number of active drilling rigs leads to an increasing oil production. In turn, the growth of supply in the oil markets puts pressure on the price of black gold. Conversely, a decrease in the number of active drilling rigs has a favorable effect on prices for oil and refined products.